Woolworths faces R500 million impairment on Australian brand. Politics by Satori News. South African retail giant Woolworths finds itself navigating troublesome waters once more as it prepares to write down approximately R500 million from the value of its Australian business, Politix. This comes on the heels of the company's previously calamitous foray with department store David Jones, and it marks another setback in Woolies' operations down under. In 2016, Woolworths made a strategic move to acquire the Politix menswear retailer for R711 million, a $68.7 million, with the intention of broadening its menswear range in Australia and, potentially, New Zealand. This purchase was part of a larger vision to create a varied portfolio of iconic Southern Hemisphere brands, according to former Woolworths CEO Ian Moyer. At the time, Politix was conceived as a robust addition to the Woolworths family, with good standing among men aged 18 to 35. Fast forward to the present, and the situation has shifted dramatically. The impairment, essentially an adjustment in accounting to align the book value of an asset with its market value, suggests that Woolworth's initial valuation of the Politix brand was overly optimistic. While a minor fraction of goodwill will remain due to the weakening of the rand against the Australian dollar since 2016, the bulk of the goodwill from the purchase stands to be written off. Despite these challenges, it is important to note that the impairment does not signify actual cash loss, but an accounting reflection of lowered expectations for the brand's profitability. Woolworths initially recognized a goodwill amount of R513 million from the acquisition, representing the intangible value attached to Politix above its tangible assets. Currently, Politix operates approximately 94 stores across Australia with a significant presence within larger department stores like David Jones and Myer. The tough retail landscape, marked by low consumer sentiment and a persistent cost of living crisis, has resulted in an 11.3% drop in the brand's sales for the January to June comparison from the previous year's performance. Even as sales dwindle, Woolworths has sustained retail presence growth mainly through opening new concessions for its brands. The Australian misadventure mimics the disappointing trajectory of the David Jones acquisition. In 2014, under Moyer's leadership, Woolworths acquired David Jones for a hefty R21.4 billion, marking a 25% premium on its trading price. The anticipated synergies failed to materialize, requiring extensive capital reinjection to revamp the stores. By the time of its sale in 2022, Woolworths had written off over $1 billion Australian dollars on the initial purchase price, selling the department store chain at a fraction of its original investment. As Woolworths grapples with this significant impairment for Politix, the retail landscape appears increasingly unforgiving. The company is tasked with revisiting its strategy and positioning in the Australasian market to navigate through these challenging times. Thank you for choosing Satori News.